Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, good morning to all of you. Welcome to another episode of the AJ Brown Show, episode 187. We're finally in June, halfway through the year. My name is Cyprian Francis, and with me, as always, our mentor, our guide, Mr. AJ Brown. How are you doing today, sir?
I'm good. I'm good.
Does it feel like summer for you yet?
You know what? It in the last 2 days, we've been having unseasonably spring-like weather here in, outside of DC. It seems like we go from winter to summer in like 3-week period. Well, it's been more like a 3-month period, which everybody has loved, but in the last 2 days, we're now up into the high 80s, low 90s with like 70% humidity, and it feels like a swamp, and that's what I'm used to in summer here. So, yeah, it feels like summer.
And summer in terms of weather, how about summer in terms of trading, in terms of markets? Are you feeling
Oh,
that slowdown yet?
no, no, there's too much crazy happening right now. What I'm feeling is that people don't know what to do, so they're sitting on their hands. That's what I'm feeling. And that's not a good situation. And we could talk about that more later.
Yeah, well, sitting on your hands and not doing anything, or sitting on your hands and using these wonderful option tools and option
Mhm.
strategies that you're educating and your community is working with to take advantage of it. Let's start with the overall markets. Now, the past 2 or 3 weeks, we've been talking about a potential top, a potential pullback, a little bit of sluggishness. How's the week panning out this week? Because we did just get some pretty in-depth, important economic news. Where are things standing from your perspective?
Well, I have a year-long perspective here because a lot of people keep talking to me about how we're in an up market, and I keep saying, "Not really." It seems like we've got this roof that we keep tapping up against at $6,000. So we're gonna keep watching that roof. Yes, today we got news. It wasn't here, I'll pull that up. It wasn't actually that it was anything spectacular. It was more that it wasn't a downer, right? I've been looking at um, the employment situation all morning. And earlier this week we got some conflicting news. I mean, just to give people kind of a heads up here, we had the study that I look at every month, that I look at really closely, is this job opening labor turnover survey, and it was actually a little bit positive, which was telling everybody that, hey, the economy chugs on despite all the obstacles that are placed at it. But then at the same time, on the next day and the day after that, we got kind of our private version of today's government report on employment situation. And we also got the jobless claims, which is a weekly report. And these two reports were quite negative, and people were starting to get a little bit flustered because of these reports. But then today, the report came in and it was actually as expected, right? Let's take a look at today's report just to give, an idea of what these numbers are telling us. So, they were expecting that 29,000 jobs would be created. Well, 139,000 jobs were created. Of course, last month they went back and looked at the number that they reported and they lowered it by 30,000. But still, this is not without expectations, right? The unemployment rate stayed the same. All the numbers came in, around as expected. Manufacturing went down a little bit, but last month we corrected it and put it up a little bit. So what the big news for today is that the employment report didn't disappoint like there was expectations for. So we're seeing a morning little pop here. Let's zoom in a little bit on our chart. We're seeing a morning pop. I'm not sure that this pop will last because, no news is okay for a minute, but then people are going to start thinking about, what's been on their mind for the last 2 or 3 weeks. And if you take a look here, we haven't done anything but really consolidate or converge into a line just shy of 6,000. So that's kind of where we're at. People are on their hands waiting to see what way things go.
And it's more of a question of what's going to be that catalyst, right? Because if we look at the, you had the year-long perspective, the catalyst to the downside, and we've talked about this multiple times, was self-inflicted. And so
Oh,
are
yeah,
we going to
totally.
have another self-inflicted catalyst to bring us down? And a lot of it now is turned to the policy coming out of the White House. And so
Absolutely.
these like press conferences and question sessions are really moving markets based off of questions and answers, that the president gives.
Well, there's two topics right now that investors are looking at. And actually, as is typical of Trump in his first term, he's kind of pulling the same strategy in the second term. When there's stuff that people are looking at that disappoint them, he tries to you'll notice that headlines come out that try to distract us onto something else. So there were some headlines earlier this week about, making it so that some countries are on the do not fly list. But investors have gotten like wind of this. I think they kind of understand kind of this like move the cups around game that he plays, and so they're laser focused on two topics, right? Trade, otherwise known as like the tariffs, or the trade and tariffs go hand in hand, and then also this big they call it the big beautiful, or depending on how you look at it, this bill that's currently being discussed about at the federal level for taxes, right? And for budgets is really what the bill is. And so those two things are kind of like big question marks in all investors' heads. And so that's why they're kind of sitting on their hands right now.
Yeah, and part of that tariff discussion too is a phone call, right? I know that
Mhm.
the big China debate, for the past couple of weeks with the increasing of the tariffs, and so President Trump and the I don't know what you would call, he's not president, but the leader of China, Xi Jinping, or had a conversation. And so the
Yesterday.
fact that they had a conversation means that we must be getting closer to making a deal. So that's got to be positive.
Well, and
But
we made a 90-day deal, right? And then for some reason, Trump said that he didn't like that deal and that he was raising tariffs again. That was the end of last week. And then he said, but I want to get the president on the phone. And so now that they've had the phone call, and he said the phone call was good, but we still haven't seen anything materialize. And I think, like I said, investors remember last week we were talking about the taco trade,
taco
the
trade, it's
yeah,
still
we were
on.
talking. Yeah, yeah. Trump always chickens out. So I think that investors who at one point were, fully believing some of the stuff Trump said would happen are now questioning it. So instead of acting on him saying that it's a good call, they kind of were waiting to see if there's, proof of the pudding.
And so it's almost as if the rhetoric coming out of the White House is more impactful to these markets than the economic news, than the information that we're getting from even some of the Fed presidents. Because I think we had some beige book or is some sort of the minutes came out, and it's the same rhetoric that we've had for 6 months,
Mhm.
where it's hey, we don't know what's going to happen, and
Mhm.
now we get some employment news. And so I
The
guess
Beige Book, you're right as well. So the minutes came out last week. The Beige Book came out this week. Beige Book is the raw data that the Fed presidents take into their meeting in 2 weeks to discuss monetary policy, and that came out this week, and it wasn't very insightful.
nobody cares. It's more of like, hey, who's going to tweet something crazy today, and is it going to
Yeah,
push the market up or down?
yeah. The one thing that I can say is that our economy continues to chug along. I mean, despite all the insanity, it continues to chug along. So that's positive. I don't know how much longer that can last, but that's what's happening, right?
And then the big news yesterday, I don't know how in tune you were with the day-to-day
How could you
activities,
not?
but
How could you not I know what you're about to say. Go ahead.
well, I just like I had to go on my I literally follow one person on Truth Social, and I had to go turn on my notifications because it's not only is it like impactful, but it's kind of entertaining at this point because of what happened
Right.
yesterday, right? And so you mentioned the big beautiful bill, and that may have been the catalyst to the fallout of the two mega personalities of Elon Musk and Donald Trump, in that Elon Musk came out and really down the rhetoric, saying, we're spending too much money, this isn't what I signed up for, da, 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 da. Trump continues to back it, and then
The back and forth between
and
the
and
two.
but then it got pretty serious, because it was I mean, here, let me pull
Epstein
this.
files.
Exactly. So Trump, or Elon Musk, basically came back and said, the reason they have the Epstein files haven't been released is because Donald Trump is on them, right? And then as soon as he said that, Trump is like, "Oh, Elon Musk
Elon's
does
on
too much.
drugs.
He does too much ketamine,
Yeah.
and you know what? Maybe we should pull back our government contracts." And it really took Tesla. Like, I don't know if you were watching the Tesla stock price, but it was down like 18% at one point on this back and forth Twitter rhetoric, which really took the Nasdaq and a lot of the other indexes down. I don't know if we've recovered maybe a little bit, but that big drop right there that you're showing, that's self-inflicted. That's basically Elon Musk, the richest man in the world, having a Twitter beef fight with the president of the United States, and I'm not sure that's good for anybody.
Elon said you wouldn't have been elected if it wasn't for me. And yeah, I followed that. Again, what's also possible here is now they're in the Congress, which is right now discussing this big, beautiful bill. It's now possible that some of these congressional people will be on Team Elon instead of Team Trump. And it could, I don't know if you guys remember back in 2017, the whole thing that the party had campaigned on was revising the Affordable Care Act. But when it came down to it in 2017, it was actually John McCain, right before he passed, who went with, and nothing got done. The Affordable Care Act stands today. And, you know, there could be some senators and perhaps even some House. I even saw what's her name from Georgia, the one who's was on America's Idol, and then after being on American Idol, she's now a congressperson. MTG, Marjorie Taylor Greene. She even is like distancing herself from the bill. She said, I voted for it, but I didn't read all the pages. And now that I've read the pages, Elon's right, and I don't want to back it anymore. Right. And so now there's senators. I mean, there's a couple of senators that have always been against it. Rand Paul, who's very much into controlling the debt, thought it was crap to begin with. So it doesn't take much. Remember, it only passed the one house in government by one vote, and now it's in the senator's place. And I think that if there's 4 senators that dissent against the bill, it's going to have to be completely redone or go back to no budget at all. So yeah, I mean, that's what investors are waiting to hear about. They're waiting to hear about that. They're waiting to hear about trade deals. And I think they're still waiting to hear, because I don't know if you've been following, but it's still caught up in the courts as to whether or not the courts are going to take away Trump's ability to adjust tariffs on the fly. So
It
they're waiting for that. But what we find when it comes to this is that let's go back to the S&P really quick. I put on candlesticks so that people can really see kind of the consolidation. So here's the S&P, and it's been consolidating for about 2 good weeks now, almost 2.5. When you see that consolidation, it's like people are sitting on their hands. They're wondering what to do. Basically, they're wondering, should I buy or should I sell? So they're kind of like in this position where they're on the fence. And what we usually see, and we haven't seen it yet, but when we see that they're on their hands for too long, and the magic number is usually 3 to 5 weeks. If they're sitting on their hands without a clear idea whether they should be buying or selling, we start to see the VIX creep up, because then what they're doing is they're starting to get nervous, because again, you haven't been giving them clear direction on whether we should be buying into the markets or selling. So they start buying hedges. So I'm waiting to see if the VIX starts creeping up, because what that means is that people are getting jittery, not knowing what to do. It hasn't happened yet, right? The VIX is right at its mean. We were able to adjust the mean this month, and so you can see we're right. Here, I'll put it more into focus for you. We're right at our mean, but they're just waiting. And so think of it this way, Sip. If you like make somebody sit on the couch and you say to them, hey, I'm going to get back to you about what we're going to do today in 5 or 10 minutes. They'll probably sit on the couch and it won't be any big deal. But then if you say, hey, I'm going to get back to you in about 2, 3, 4 hours, they start to get jittery. In fact, I've seen that in like the waiting room at the car dealerships when somebody has to bring in their car for service, and the guy keeps coming out and saying, we don't really know what's wrong yet. Give us a little bit more time. And people start to get, if they've been sitting in there for half a day, they start calling their friends. Hey, I haven't talked to you in a long time, but and they're starting to get jittery. Well, imagine making somebody sit on that couch for days or weeks without letting them know what's going to happen next. Then, you know, you say to them finally, like, hey, let's go take a quick ride up to the 7-Eleven that's like, less than a block away. They're, instead of just like, if it was a usual time, they'd be like, oh, cool, let's go to the 7-Eleven. They'll be like, yeah, 7-Eleven, right? They're so like, you kept them undecided for so long that the smallest little influence, one way or another, is going to get them extremely excited. And so, breaking that analogy down to market terms, when you see that consolidation and it lasts for so long, and then you add to it that they start to buy options because they're hedging, right? When you see that consolidation, it usually leads to something called a breakout. And so I've actually been preparing the folks in my programs for, everything is leading up to the potential of a breakout. That means that the price is either people are going to shoot up or shoot down, usually with a overextended reaction to something small. It's like the smallest little tinder into a bunch of like gas soaked rags, right? But you don't know whether it's going to go up or down. You only know that it's not going to continue sideways consolidating like this. And so I'm actually getting prepared for breakouts. So here we're hearing on the internet that there's a breakup between Trump and Elon. What I'm actually preparing for is the market breakout when it finally gets settled. You know what I mean?
Yeah, and it reminds me of that weekend when DeepSeek came out, where it was kind of quiet, and it was quiet, and you wouldn't have thought that a Chinese AI company releasing a new software would
Would
lead
make any
all
waves.
would bring all the AI stocks down, and I think we opened down like 3, 4, 5% that day.
Yeah.
And when you say like a Tinder lighting a match of something that's unexpected, that's what comes to mind first.
And it could be
Se-
so small, Sips, so small, and yet poof, it could totally make us either start buying in droves or selling. And you know what? The everybody will jump on the bandwagon and you'll see a move. So I'm preparing everybody I know for potential breakouts.
And so when you were bringing up the VIX, does that mean that that's a trade, a strategy that you're looking at every day to put on? Because it seems as if the logic is we're more likely to increase in volatility than we are decrease because we're at this under the mean, going back at
Mhm,
least looks like the last 2 months.
mhm. Yeah, so the scoop is I like to place the VIX whenever I see some sort of bottom, and I can use the indicators that we have available to everybody for free to identify that. One of my favorite is this MACD. Let's see if it'll come up. Um, I need to tweak it because I need to tweak it on the close price. So let's do that. Boom and boom. There we go. So, when I saw that bottom back about 2 weeks ago, I went ahead and placed my VIX trade. And you remember how the VIX trade works? It kind of does, I'll show you the profit and loss diagram. It kind of like does something like this. And you're in this zone most of the time. And this is the break even zone right here. My invisible ink's going to disappear on us. But basically what happened is we stayed in my break even zone, and so I made a couple of pennies, enough to cover commissions, but it was no great shakes. So I'm waiting for the next signal. I got a signal last night, but it's already reversing, so I'm not going to be acting on it today. I'm looking for the next signal to place that trade again.
Awesome. And I know that was a killer trade for you. I mean, just looking at the chart, I believe you rode that wave up the first time around, and it's something that you play. So if anybody's interested in some of those previous examples, head on over to the YouTube and check that out. I did have one more thing from yesterday's big breakup that I thought was rather interesting, and that was one of Elon's tweets, and that was he basically took a poll and he said, "Is it time to create a new political party in America that represents 80% of the middle?" And I mean, he got 80% of the votes there. And looking at history, if there was anybody that could create a third political party to compete, I think Elon Musk would be a good candidate because he basically funded the Republican initiatives this past year. And so I thought that was interesting. And so, we're going to keep an eye on it. Does it change your outlook on Tesla in general? Just because, I mean, maybe it's good that Elon is getting kicked out of the White House so he can go back to working on technology.
Yeah, a technocrat, I'm not sure if that's what you need in order to uh, really cater to the people. But when left with any choice, the people are going to take something new, right? So you never know. But I do think that perhaps he needs to get back either to working on his SpaceX and his Tesla. But I think honestly, he kind of is. I think one of the things that he was unhappy with, and why this whole war between him and Trump started is I believe that some of his companies were not going to get the contracts. I mean, now, of course, with the war of words between the two of them, he may lose all of his contracts based on what I've been hearing, on the Twitter from Trump. He's like, maybe we need to think, but I think that he didn't get everything he was hoping for in this tax bill. I know that his outward messages have a lot to do with like, trying to rile up the people and about how but when you look a little bit closer, I think that the bill that's currently, under flux, kind of left him not as getting as many contracts as he had wanted. So I think that might be the spur of everything. I mean, at least that's conjecture, right? I don't know.
Yeah, well, it's definitely the topic of the day heading into the weekend. I saw that you
But we
pulled up
need to
the
be
S.
prepared for breakouts. I mean, for the everyday investor like me and you, we need to be prepared for breakouts. Number one, defensively, right? Because a lot of our premium selling positions, unless you've got the collar on the trade, right? You've got the actual premium sold and the protection bought. You're not going to weather a breakout very well if it goes against you. If it goes for you, I mean, that's great. But so my advice is for defensively, either get into all cash or even better, put your collars on, even if it means putting them on early. But then also, there's breakout strategies that we can use to take advantage of breakouts. Maybe be ready for those.
Yeah, and we'll dig into a few potential possibilities. I know
Yep.
we've got your pick of the week, we've got our speed round, but I do want to remind everybody that might be tuning in for the first time. Welcome, thank you for joining
Hey.
us. Uh, AJ's got some pretty intuitive and fancy, snazzy indicators, charts, color signals, things like that. And if you want access to it, if you want access to those things, and to really get in tune with what AJ and the trading trainer community is doing, head on over to our quick links page. I threw the link into the chat. You're going to get all sorts of goodies over there. We've got AJ's social channels. We've got his free indicator suite. Check out his daily workshop, which breaks down some of these premium strategies. Learn about the coaching program, learn about Trading Trainer in general, and come join the squad. Come be a part of the team. Come share your knowledge and learn a little bit from some of these guys that, oh, well, geez, AJ, you've got some people that have been with you almost 20 years now. So, find a way to make it work for you. Get ready for these breakouts. We're going to take a break here. We're going to go over AJ's pick of the week. We are streaming live, so if you guys in the internet sphere have any questions, head on over, throw it in the chat. If we have some time, we'll go through it. Otherwise, we're going to take a break. We'll be back in a few seconds. Sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Back at it again. AJ, any breakout? Because I know we've got a little bit of time before we go into your pick of the week. When you talk about the concept of breakouts, what is kind of the first thing that maybe you look for? Is it that that pin shape in the chart pattern? Is that kind of a good first indicator to basically say, hey, we're building up tension for something to happen?
Yeah, absolutely. So if you're actually searching out breakouts, I mean, that's kind of the number one thing to look for is there a candidate for no other reason, consolidating at a certain price? Are the investors sitting on their hands? You could also, for those of you out there that are like technical folks, you could put a Bollinger Band indicator onto your symbol, and look to see if it's staying inside the Bollinger Band for more than 20 days, right? It hasn't ventured outside of the Bollinger Band for more than 20 trading days. That's always a good indication too.
And then from that, you are either creating some sort of a, like top and bottom, so that if it breaks to the upside or breaks to the downside, you're kind of catching the next wave.
Absolutely. So there's actually, it's funny you bring that up because remember last week I totally was telling people about Applied Digital Corp. That was my pick of the week. And you'll see what happened here. I told everybody, hey, I'm looking for a top to be found. And if I find that top, I'm going to do a premium trade. Well, I got a signal for a top to be found on May 29th, but I did not get any follow through on May 30th. So I didn't place my trade. And then check out what happened. On June 2nd, it started a breakout, which has continued. It's still going on right now. I've got a trailing stop in place. So, in addition to looking for that telltale pattern, another thing I look for is velocity of price starting to get very high. Like there's a speed limit, right? And I'm going to give this out for everybody, but if you want to, we're actually thinking about doing, a special one evening like session on this. But if you take the price of something, like this was trading about $9, right? If you take the price of something and you multiply that by 1.2%, right? If you see this stock move 1.2% of its price in an hour of trading, that tells you that it's moving pretty fast, that investors are jumping on board very quickly. And if you want to look on a shorter time frame, like a half hour, well, then it's 0.6%. You could even go shorter than that. So I look at that. In fact, I have it right here. Check this out, Sib. I have a little indicator that I've been working on. I haven't released it to anybody, and it looks crazy. But this one down here, this thing called Equity Trader Momentum, ETM, it's another term for velocity, right? And so you can see it's measuring the velocity over every half hour. And when it gets above that 1.2% number, that's kind of a good symbol, good indicator that this thing is racing in a certain direction. And then I look over here, this R squared tells me how smooth it's racing. And if this number is above 0.8, and at the same time that we get a pop, that's a good trade indication. So, another reason to get involved with us here at Trading Trainer is, I'm constantly coming up with new ways to look at the markets and find these type of trades, especially when it's the trade of the day. And so this we just came up with this week. I'll probably refine it a little bit more, but I give it to all my program participants, and it tells you exactly when to trade. Here's that APLD. You can see I got my pop and I got my over 80% early in. So all to say, you could actually automate this. Yes, in the evenings, you can look for those telltale patterns of consolidation and high implied volatility or building implied volatility. That's the more, traditional way to do it. But also, you could just take your whole watch list and install some sort of indicator like this on it. And whenever a symbol in your watch list starts to demonstrate that it's being broken out, it would, come up on this indicator and it would be like, hey, breakout happening, breakout happening. And you could either go chase it with a stock or a stock replacement trade, or you could use something like a straddle or strangle if you want to be more passive about it.
Yeah, and that's one of the benefits of joining the program. And I know you and the team in the back end are developing some of these strategies to be a little bit more seamless, easy to use for users. And so that's one of the benefits of heading on over to that quick links page and signing up for the free indicator suite or the workshop. And maybe folks should head on over to YouTube and watch this setup from last week. Because
Absolutely. I
although
literally got in on this SIP earlier this week at $9, and it's currently trading at 14.35. You guys do the math, but that's a good trade.
yeah, almost 100%, and it looks like it did
I
even
used a
up.
stock replacement. We're talking 300%. My stock replacement is leveraged 3x.
Goodness gracious. All right, folks. Well, that you might have missed that move last week, but you're here now, and we're looking for some new opportunities. And so, with that, let's keep the party going because we're going to continue to dig through some of these names that we've got from our lovely folks all around the country. But this week, AJ, you're looking at another new name that I don't think we've covered very often on the show. Might be a little bit more exotic, and that is International Game Technology, ticker symbol IGT. That's your pick of the week. What do you like in there?
All right, so IGT, based out of the UK, these are the guys that are behind a lot of the lotteries, not only here in the United States, but around the world, right? They have their technology that runs these games. They've got all sorts of other technologies, but this is the company that is like behind a lot of that stuff. And here, let me zoom out a little bit for you here. So, you know, they're trading at a price that I really like. It's low enough that us smaller investors can get in there. And it gives me very good signals on my fast MACD indicator, the indicator that you can go download. It produces these arrows. And, I've got a couple of special things that I put into this indicator, like the ability to choose which price it's calculated on that your standard MACD indicator wouldn't do. And it comes out in this nice arrow. What I like about this IGT is that the indicator is giving us very clear indications of when to trade, right? And it's also giving us very clear indications of when maybe it has a false signal. So I love it when my signals are crystal clear, when they're clear of when to follow them and clear when to ignore them. So that's check mark number one about why I like IGT. But number two, it's coming down, forming another bottom. And so I'm looking for a good opportunity. I got a signal last night, but I'm not getting the follow through so far today. So it may not happen today. It might happen Monday or Tuesday, but I'm looking for the opportunity to go ahead and either buy this stock, or there's actually a substitute call option that looks like it would be the perfect substitute, and it would be cheaper, allow us to have more leverage. And that's the International Gaming Tech January 2026. So it's pretty far out in time. $10 strike price. That's pretty deep in the money. Call option. So that's the IGT January 2026 $10 calls. I could see buying a few of those contracts once I get a good signal at a bottom and allowing them to appreciate as the symbol moves up. And then when I get a signal that it's topped out, that's when I'll sell my premium and buy my protection, collar it. And as I've been telling all my program participants, and now I'm telling all of you out there in the internet, it's okay if we put our collar on early before we get the signal. You're not going to get the best price, but at the same time, if your collar's on and there's any sort of market-wide breakout, once your collar's on, you don't have to lose sleep anymore. The trades self-adjust. So it's always behooves you to put the collars on if you think that there's any chance that the price could go crazy on you, that it's not going to be as predictable, which is like every day now. So I love IGT for getting into, kind of this bull type of diagonal debit spread. And yeah, that's why I like it.
Yeah, and that's 2 weeks in a row that your pick of the week is very well priced for, different portfolio sizes. I know sometimes we've looked at the names that are 300 plus, a share stock. This one's 14. Last week, whatever the
Yeah.
ADPTT was at about 8 or 9. So very, very reasonable to execute and test these
For
strategies.
anybody with even the smallest portfolio, you can get into this.
And part of the beauty of using options is you don't have to put up the $15 per share. You're using a
No.
substitute, which is, the logic behind the leverage. And so that's AJ's pick of the week.
I'm
International.
curious, right now, if you were to use the substitute option, that's this guy, it's going for, instead of $15, it's going for $4.95 right this minute. So you can get it for about the third of the price.
Yeah, and that's the beauty of using options. And so if you're not utilizing this beautiful tool, sign up for AJ's webinar. Keep tuning in to the show because we've got some more names, but that's AJ's pick of the week. International gaming or international game technology. And being in the space that they're in, I don't think they're as susceptible to these crazy movements in technology and this and that. I mean, people have been
People buy their
their
lottery
ticket.
tickets.
Yeah. So, all right. Let's keep the party going because we've got some good names from all around the world. Actually, yeah, around the world. Sticking to the foreign topic, our main man Martin out of London, England, the UK is interested in Barrick Mining, ticker
Oh,
symbol
yeah.
B. Is this is kind of the gold play that's been
Copper
hot
gold.
has been hot the last couple of actually all year basically.
Yeah, copper gold. And if you look at the price of gold, it's at its all-time highs, but it has been also somewhat kind of staying at that 3,400. I think that's where it's at right now is 3,400. Let me see. Gold, yeah, $3,400 an ounce. Yeah, this is a copper gold mining company. I see what I think you're seeing, Martin. I'm seeing just today, and I'm going to wait. Of course, this is an end of day signal, but I'm seeing a top being found. Um, I'm also seeing that there's a level of resistance, probably around $20.50. A level of support. Uh, is it 1787? It might be also 1775, something like that. Okay. Yeah. So you want to do a shorter term trade. I'm guessing you want to either short this stock, and it's not a very high price stock to short, so that's not a bad deal. Or I'm thinking you are considering using a substitute option. Let's check it out really quick. I'm going to go to the options lookup tool, which again is free to anybody who wants to get access to it. Let's look at all of our options. Let's look at our price components. And let's go out to either January or March of 2026. And we're looking at a put option. Yeah, right here. I like in fact, I could be talked into the $25 put. This is the $25 put that expires next January. It's going for $5.35 versus, so it's about 25%. It's about a quarter of the price of this stock. So yeah, you could buy that put option and then let it increase in value as the stock goes down. And then the stock has already tested this $18, $17.75 level of support 3 times already. So if it tests it a 4th time, you sell your put premium, you buy your protective call somewhere around here, probably around $20, $22.50, something like that. And you're set. You're going to create an income generating stock out of this altogether. So I like it. I like the pattern. I like the liquidity in the option chain. I think you found a great candidate here, and you could play it both ways too. I don't know. Maybe you already had bought some of this stock when it was down at the low price. And if that's the case, you could be using this to sell calls and buy protective puts. Either way, you could trade this on both directions. So yeah, I'm a big fan of it. Let's go.
Yeah, and I could see there being some sort of a pullback in the metals just because it's been running up for so long that
Which
at
is
some point
fine.
it's got to take a breath. So
With
uh,
options, we can make that into a moneymaker.
that's right. Well, thank you for that, Martin. Moving on to our second name, a name that we touch on the show often. Doug out of Austin, Texas, wants to know what's the scoop with Intel.
Yeah, we do like Intel. Why do we like Intel? Well, because they're not, I mean, especially now that the CHIPS Act is maybe going to get scrapped. Intel is a company. They are a mature company. They build chips. They're not in the news all the time. They're not, building the crazy cutting edge AI chips like Nvidia is, but still they're a big business, right? You go to Costco, you go to Best Buy, and everything you see has Intel chips in it. So that's why we like them, is because they're kind of under the radar and they're a good company most of the time. However, yeah, I see this level of support that continually gets tested. I mean, it just is getting tested right now, and it got tested here, and it got tested here, and it got tested here. So this level of support around $19.75, $20 seems to be, solid. But what I'm seeing as far as resistance goes is almost like a consolidation. Um, So I think what you're thinking of doing, Doug, is buying this because you got this signal 2 days ago. You have yet to get follow through. You may actually wind up getting follow through today. It's possible. And if not, you'll continue to watch this. And so you're thinking of buying this stock. That's fine. If you buy this stock, please make sure you have a good stop loss order in place. There's also a lot of liquidity in the options chain. So you could actually, instead of buying the stock, you could buy a call option. If I type into my options lookup tool, the ticker symbol, and look at the call option. So I'm interested in, again, going out to January or March of next year. The call option I'm interested in is probably this $10 call, and there is quite a lot of excitement around it. So you could buy this $10 call for $10.45. So instead of spending $20, you spend $10 and you get kind of the same bang for your buck. But just make sure you have a stop loss in place in case this kind of goes against you. This is one of those stocks that I would have my new breakout watcher installed on, so that if it breaks out and it breaks out down, I could jump in really quick and buy myself some put options and get rid of any call options. So I see the signal you're seeing. I'm giving you plenty of warnings as to the potential of breakouts, so please heed my warnings. It doesn't mean that I don't want you to do the trade and set up a premium trade per se. It just means I want you to be careful. I want you to have the hedges in place. I want you to have the indicators in place in order to deal with it if it does decide to break down. And if it does decide to break out, huzzah! If you're in that position, you're going to be very happy that you were. So just be careful, more careful than usual when you trade this.
Yeah, love the setup. Thank you for that, Doug. Intel's definitely one that we look at fairly often. Moving on to our third and final name, Bill out of Kansas City, Kansas, wants to know what's going on with Halliburton, the refiner, right? Usually
Mhm.
follows along with oil. I feel like oil's been quiet lately.
Mm. Yeah, it's a little bit under, meaning, when it's trading around 70 or 75 or even $80 is when there becomes more excitement around drilling and opening up and the companies wanting to find more. When it's trading around where it is now, it's been trading around 60, I think it's around $63 a barrel. It's not like we're gonna shut down any wells, but it's not like we wanna, invest the money into drilling new wells. So I heard something about how they're gonna open up the Arctic Refuge once again for drilling. The opening it up is one thing, but for the companies like Mobil and Shell to hire like a Halliburton, who then hires like a Schlumberger, for them to actually do all the investment to drill, it has to be worth their while. So, opening up the Arctic Refuge and then actually drilling on it is two different things. Halliburton's price is definitely reflecting the price of oil being too low. In other words, they've been coming down. It's basically they're not getting as much business because people don't want to drill right now, because the price of the oil is low enough that you don't need to. Supply is Oil is very much supply versus demand. The other thing I'm seeing, Bill, because I see what you're seeing. You're focused on this signal right here, and you're thinking it's time to buy Halliburton. And again, this is even more crystal clear. Sip, you were asking about that pattern. Here it is. This is that pattern of consolidation where you want to look for a potential breakout. This is it. This is consolidation. This is like right out of a textbook. So I see what you're seeing, Bill, but I want you to zoom out a little bit. I think sometimes I tell my traders, and it's a common thing to do, you got to look past the tip of your nose. So you're looking right here, but I want you to look back about 3 months and realize this is not going to be one of those I'm going to buy and then sell premium. What you're going to want to do here is a breakout trade. And, you could be looking at a straddle or strangle. A straddle or strangle can be configured one of two ways. You can either configure it so that it profits on the implied volatility rush that indubitably happens right before something breaks out. It's called trading the smile curve. Or you could structure it a little bit differently so that you actually endure the breakout and you profit whether it goes up or down. So straddle or strangle might be in your future, or if you are just going to watch like I watch and look for the telltale signs of smooth and consistent velocity, you could probably catch the breakout if you want to do some day trading. So that's what I think you need to do with Halliburton. I wouldn't get into this as a premium selling trade. I don't think that's what's right here.
Awesome. Halliburton. Uh, do they call that a pennant? Is that one of the consolidation
This is
term?
this is more like a channel consolidation. Pennant patterns are usually within 3 to 5 days. So they're consolidation in 3 to 5 days, not 3 to 5 months. Or this is actually more like 1.5 months. But and a flag pattern is also a consolidation pattern, and it usually does something like this, and then you see a pop up like a flagpole, and you see it do this again. And so it's more like a downward type consolidation, and then you have a pop up, and it usually comes in twos or threes. This is more of, right out of the textbook, just a sideways, slow consolidation. Traders of Halliburton are wondering whether they should buy or sell. They're basically consolidating on about $20.50. And, the longer you make them wait as to what they're going to do, the more that the smallest little piece of news, like the smallest little tinder, will get them excited, and they'll just start buying or start selling. So, what you might also do to get, some telltale signs is start watching the implied volatility of the at the money options and see if it starts to rise up. That'll tell you that investors, that have been in Halliburton that don't know what to do are going to start buying hedges and driving the price of options up. Again, that's a telltale kind of precursor to a breakout. So I would be looking at Halliburton for breakout trades.
Yeah, I mean, as active and more active investors than not, I think that tender is always a possibility. But when you look at the tenders of the Biden administration versus the tenders of the Trump administration, there's a lot more tender potential in the Trump administration, and so
Truth.
having your protection and your risk parameters in place is definitely necessary in this investing world. And so that's the beauty of the majority of the positions and strategies that you put on is people always have their profit potential, they have their risks in order, so that at the end of the day you can turn your screens off, go about your business, and if the tender strikes, hopefully you can benefit from it. If it strikes, you've got your risk in place. If it goes against you, you've got your risk parameters in place, and then it's just showing back up to bat the next time around, and you might strike out once, but you may hit a couple home runs like we saw in some of your picks of the weeks there. So once again, let's go ahead and give everyone.
I mean, my big goal, I got to tell you, my big goal as well is how can I do this on cruise control? How can I do it? Because you know me, Sip, I do not like to stare at the screens during the day. I like to go out and play, right? I have so many hobbies. And so, even breakout trading, you guys might not believe this, but even breakout trading, whether you're doing a passive trading strategy like a straddle or a strangle, or even this active trading that I'm talking about, you can totally automate it with the different strategies and the different trading platforms. And that's what I like to do. I like to set it up the night before and then just let it happen during the day. Let the algorithms work, right? So that's what Trading Trainer is all about.
That's right. And if you new folks out there want to learn more, head on over to AJ's Quick Links page. We've got a bunch of goodies there. Sign up. If you have any questions specific to what AJ's been talking about, the program, things like that, leave a comment in the chat. Send us a DM. Head on over to trainingtrainer.com. Hit the contact us page. Someone should be able to get back to you. Or, just head on over to wherever you're watching the stream, preferably on YouTube. Hit that subscribe button. We'll have some lovely goodies for you, whether it's some cut downs of these clips, some of AJ's, weekly insights, and or, just coming back next week to get some, status updates on next week's show. But it is the first week of June. Summer is here, but there's still a lot going on in the market and in the news, and so the opportunities are going to continue to be there. And so hopefully you can follow along and boost your own portfolio, get some winners on your side, and become a member of the community and show some love back. So I think that's pretty much all we've got for the show. AJ, heading into next week, what are you kind of keeping your eyes on? Sounds like breakout is kind of the thing here.
Breakout, but also just managing my premium trades. And like I said, I'm, in many cases, I'm going ahead and pulling the trigger on getting those collars in place, selling the premium and buying the protection earlier than my trade signals. It's okay to leave a little bit of profit on the table in order to protect yourself from undue risk. So that's the other thing. I'm looking at what trades need to be hedged early.
Awesome. And we'll be keeping an eye out to get some more insights. Otherwise, thank you everybody for tuning in. Feel free to show some love. Hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. AJ, thank you again for your time this morning. Thank you, everybody, for tuning in. That's all we got for you, folks. We'll catch you guys next week.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe